from the financial centers of the world, this is Bloomberg Markets with Alix Steel and Guy Johnson.
From New York, I'm Kriti Gupta with Guy Johnson in London. Alix Steel is off. Welcome to Bloomberg Markets. We start off with one of the biggest national news stories this morning and bring you the developments from yesterday's shooting at a Brooklyn subway station. Let's bring you the latest headlines from what we know. Of course, we know that a gunman had opened fire in a subway station after releasing 2 smoke canisters, injuring 23, 10 with a gunshot wound. We are still waiting for updates on their conditions of the victims. We also know that Frank James, age 62, was connected to the crime scene. He has now been upgraded from a person of interest to a suspect, and the manhunt is ongoing. Let's talk about what's coming up next in terms of what the next steps are. And for that, joining us on the phone is Bloomberg legal reporter Patricia Hurtado. Patricia, thank you so much for joining us and, of course, for your diligent reporting on this issue. Let's start there. What comes next in terms of the hunt for Frank James?
Well, now authorities have probable cause to arrest him for the attempted murder of passengers on that train when he opened fire on the commuters in the morning rush hour yesterday. If he is apprehended, and there's apparently a dragnet going on looking for him, if he's apprehended, I guess it will up to be determined whether federal or state authorities prosecute him.
Patricia, do we have any idea at this stage as to motive?
He is apparently last night, in a briefing, the police and federal authorities described him expressing animus against Mayor Eric Adams, his beliefs. He says he is a post-traumatic stress disorder survivor, but doesn't explain. It's a lot of ranting, a lot of anger on these videos he posted on the internet. So they're trying to track down exactly why he came to New York. Apparently he did live in Milwaukee and also had a residence in the Pennsylvania area. So why did he come to New York and do this? What was his motive? It's still unclear.
Talk to us a little bit about what this means for Mayor Eric Adams in particular. We had him earlier on surveillance. He was the one who actually said that he is now being upgraded to the suspect level. But we also know that he has had increased security. Can you talk about the connection between Frank James and Mayor Eric Adams?
Well, it sounds like for James, Eric Adams was a target of his anger, and possibly because Eric Adams has been very public about trying to clean up the city and try to handle or deal with the homeless population. This was also something that James expressed anger about. So he basically seems to have pinpointed his anger on the mayor. And as a result of that, the mayor had his security detail upgraded because they're concerned that he's on the loose, he's a fugitive, and he may try to track the mayor down.
In terms of what New York is like this morning, how Brooklyn is this morning, how the subway system is this morning, are we returned to normal now? Have we got a full subway system up and running? Can you give us an update on that?
Well, the system has already been crushed by the pandemic, and ridership was massively down. It seemed to be slowly trying to recuperate, but I think it's only a third of what it was before the pandemic. People already are struggling with, do we wear masks? Could you possibly contract the virus if you're in the train and people are not wearing masks? And what do you happen if, there are homeless people sleeping on the train? So there's elements of other issues that are already plaguing the transit system. And now the people have this extra layer of concern that they have to look over their shoulder and find out, to determine, is this guy on the trains today?
And Patricia, we know that the school system is also of utmost concern. We know that there were a lot of the local schools in Brooklyn also sheltering in place for much of yesterday. We wonder what that looks like today as we have schools, of course, in session and, of course, closing at 3 p.m. local time. Patricia, I'm also curious about what we hear next when we talk about the New York Police Department, the fire department. Any word on when we can get more headlines from them?
No, we're waiting. I guess they're in a waiting game to determine. Right now, there is nothing, scheduled to be announced. I guess they've now determined or announced that there were videos of this guy earlier in the day when he apparently boarded the train further south. He left a U-Haul van down in South Brooklyn, and he got on the train system. So now they're saying those cameras were operating. So it looks like law enforcement is still trying to determine, track his movements and possibly determine where he went, because apparently when the train arrived at 36th Street, he may have gotten off, and now there's this manhunt for him.
This is not the first mass shooting that New York has witnessed over the last few months. Why is this one different, and what do you think New York will learn from it?
Well, I think the component is, if people have been in the New York City subway system, everyone realized how confined the space is. Where do you go? You're on a train. If this train apparently stopped in the middle of the incident where the shooter was setting off smoke bombs and firing at people with a semi-automatic, and it was stopped in the train in the tunnel for a signal, a red signal. Can you imagine in the confined circumstances and the terror? You're trying to get out of that train car and you can't because the doors were jammed. It's particularly harrowing and chaotic situation. So that's the kind of thing that I think is a particularly frightening situation. And we've had earlier incidences in the subways. A woman was pushed to her death in early January in Midtown Manhattan. So that's the kind of thing, that's always a concern for people. But then this extra situation of being in a confined subway car and having a gunman begin firing rounds from a Glock 9mm, that's horrifying.
Patricia, it certainly is. Thank you very much indeed for updating us. We greatly appreciate it. Bloomberg's Patricia Hurtado. We will, of course, continue to keep you updated with the latest developments as they happen. This is Bloomberg. We're back to earnings season in just a moment, but let's tell you what is happening now with the Bank of Canada at the top of the hour. It surprised nobody by raising 50 basis points, the hike coming through as expected. The messaging coming with it is that interest rates will need to rise further. We are going to see the halt of government bond purchases on April the 25th. All of this pretty much in line with expectations. No real market reaction as a result. That is what we're seeing in the Canadian dollar right now. As you can see, barely a blip as a result of that announcement. We are seeing a little bit of action in the bond market, though, certainly in the United States. We're going into a long weekend. Something of a short squeeze taking place right now. So certainly the bond market catching a bid. Yields coming down very sharply. This as we watch the earnings season develop, start, kick off really in earnest, with JP Morgan starting that season with a reported $524 million loss tied to the market fallout from Russia's invasion of Ukraine. In the analyst call, Jamie Dimon also spoke of the impact of the Fed's moves.
I would just be cautious. I think what you should expect is volatile markets. Again, that's okay for us. And the Fed, we each think the Fed needs to do what they need to do to try to manage this economy and try to get to a soft landing if possible.
Jamie Dimon talking about the fact that he doesn't see any scenario in which volatility doesn't remain elevated. The bank, as a result of that, is significantly upping its provisioning. Basically, JP Morgan is bracing for the worst. So the question is, should you? Let's talk about what we've learned on the earnings call. Let's bring in Bloomberg Wall Street reporter Sonali Basak. Jamie Dimon, the team over at JP Morgan, certainly expecting significant volatility. They're increasing provisioning as a result of that. What message are they sending here, Sonali?
Well, very simply by JP Morgan's Jamie Dimon, what he told journalists this morning is he's not predicting a recession, but is it possible? Absolutely. The other thing he said is that when it comes to those reserve builds, it moves around a lot. These provisions move around a lot, and it could increase by the end of the year, Guy, but it's not for certain whether it will or not. They have to prepare for the bank in any scenario in this case. The other thing you and I were talking about just this morning is the fact that risk is going up in markets with that volatility rising. In this quarter alone, a lot of that pertained to one incident, the nickel market chaos, where they had said $120 million worth of credit losses were tied to this incident. But is this a one-off occasion, or is there more risk on the horizon that can hurt the banks moving forward is the big question.
Shonali, let's talk about the trading revenue here, because we've had quite a streak of really strong trading revenue when it comes not just to JP Morgan, but a lot of its peers. We're going to hear from them tomorrow in your marathon day. But walk us through JP Morgan's results in particular. What are we seeing in terms of volatility, in terms of the VAR?
Yeah, with VAR going up and nickel being a big part of that, the big question does remain what happens if other assets blow out in a very similar way. Right now, as you know, in commodity markets, he called the oil price movements very sharp. He really did say that was going to be a risk to markets here. But there are other risks, Kriti, that they also highlighted, which includes quantitative tightening, which includes high inflation, and it includes the war in Ukraine. So when it came to the outlook moving forward about what that could mean for the bank and investors and the economy at large, after the second half of the year, into the second half of the year is when those risks become a lot blurrier to telegraph.
Okay, well, Kriti brings up tomorrow, so let's talk a little bit about tomorrow, Shonali. What is the read across from today into tomorrow? Tomorrow we get a lot more in terms of the Wall Street bank reports. What are we going to learn from them? Which is the greatest correlation here to what we've learned from JP Morgan?
Yeah, it's interesting because on one hand, you see that the provisioning for credit losses here, and you think that's just on the consumer side of things. But you're going to want to see questions from Morgan Stanley and Goldman Sachs about the health of their corporate customer as well as the consumer. And when you look at Citigroup, remember, a lot of these losses that you saw over at JP Morgan were tied to single name securities in Russia. So is Citigroup going to show a repeat in the type of losses that you see in the corporate and investment bank portfolio? Again, are there other losses that we're not accounting for here? Are there other risks on the horizon that could repeat itself? Guy, I do want to point out that even before JP Morgan announced out of this credit loss scenario, they announced about $900 million worth of reserve build here. Analysts were estimating that this is going to rise every quarter until 2024. So the question is that going to be the same outlook for all the other banks? JP Morgan does feel that they're properly reserved at this time, of course, but does that expectation change if the outlook were to get worse into the year?
Shonali, we've talked a lot about the risks here, the downside risks for JP Morgan, for the larger economy. And we should point out, of course, to your point, Jamie Dimon has been very strong in terms of being positive on the consumer and consumer strength. Another way of showing that kind of positivity or that bet essentially on the market is buybacks. And we have also seen JP Morgan report a plan for $30 billion in buybacks at a time when S&P 500 buybacks are already at pretty important record levels. That's going to set the tone for the rest of the earnings season. Talk to us a little bit about the buybacks picture and what that means for the strength that JP Morgan sees coming.
Yeah, well, there are two things going on here, Kriti. One is that the shares are still down today. So the buyback alone isn't enough to give investors something to hold on to when there's so much uncertainty on the horizon for this bank. On the other hand, the certainty that it does give investors is that buybacks will be robust here at a time where there are a lot of questions about capital buffers and what that looks like into the stress tests this year amid this heightened volatility. So a lot of questions around those capital buffers. Jamie Dimon did answer in many scenarios, and just not to really worry about it, really, for investors. And you see that sentiment reflected in the buyback.
Well, fascinating stuff. We're going to have you bright and early back here tomorrow. Folks, tune in for Bloomberg's Shonali Basic's coverage nonstop. And of course, we thank her for her time and her insight right now on JP Morgan. Let's now get the reaction to those results from Effin Devitt, Moneta Chief Investment Officer. Thank you so much for joining us. We, of course, appreciate your time and your insight as well. Walk us through your reaction to JP Morgan's results this morning.
No surprise at all to after those results. We see this as raising the issues that we've been raising with our clients now for months. High inflation, supply chain constraints, uncertainty in markets, a lot of volatility, followed by, of course, we expect a 50 basis point rate hike, so certainly a rising rate environment. So all of those indicators, and as well as the geopolitical shock, of course, all of those indicators are something we've been noting for some time. I'd say I actually took not a bearish indicator out of some of that telegraphing that Jamie Dimon did, but a rather more sanguine indicator. They're putting assets in reserve. They're expecting credit losses. We have to remember in the last cycle, we saw nowhere near the defaults that analysts had forecast. There was certainly an extend, pretend, a desire not to force companies into default. So we didn't actually see those losses happen. I think this has been done out of an abundance of caution. I would also note that the buybacks is a robust signal. And also remember that JP Morgan is a diversified financial services firm. We saw very strong results come out of Black BlackRock. They're seeing sustained inflows and a continuing growth of their asset management business across all asset classes. So even though their total assets under management took a hit from the Russia-Ukraine situation, that's very robust. Most banks now have an asset management arm, and that has been a great source of upbeat inflows and earnings.
Ethan, you referenced the previous cycle. The previous cycle, we didn't have a big inflationary problem, so the Fed could step back in. The Fed put was still active. This time round, it's not. Judging by what we got from Barkin and Bullard overnight, they are talking about raising rates effectively until they break the economy. They're talking about restrictive policy, significantly restrictive policy. That is the difference between this cycle and the last. Are they really comparable?
I think we have to look at similarities across the both. What would have happened in a previous cycle when risk was off? There might have been a flight into safety assets such as cash. That can't happen today. Cash destroys purchasing power today. So therefore, that provides some kind of put in its own right. I've noted before the large amount of assets in money market funds. Money market funded assets have soared since the pandemic, and they've actually stayed quite flat. So that in itself is really a put on markets. The fact that investors will continue to seek return in an environment where real returns after inflation are continuing to fall. And we're also looking at statistics that investors are not that leery of bond markets today, even with a rising rate environment. They see that if they're buy and hold investors, their fixed income will still come good. We saw some headlines yesterday around investment grade bonds, perhaps hitting around 9% yields. We haven't seen these kind of yields for years, for decades. So actually, if there was a yield like that, that might actually quite support markets. So it's a very complex picture, but definitely the high rates of inflation are something all investors have to pay attention to when they think about taking risk off.
You mentioned purchasing power, and my ears immediately perked up because something that we've really seen as a legacy of the pandemic and really the surge in record issuance that we've seen from a lot of corporate America has been extreme profits. We were just talking to Shonali about buybacks and record buybacks for the S&P 500. Talk to us about the cash picture at a time when a lot of people are saying inflation is going to erode that purchasing power, like you mentioned. Does that mean we should expect more buybacks, more mergers and acquisitions, more deployment of that capital, even if that means more CapEx?
Certainly, most companies are awash in cash, and those that have got some kind of pricing power have been able to pass through price increases to consumers. I'm not sure that will be sustained. We do expect to see margins come under some pressure as there just isn't that ability to pass through prices and consumers start to feel the pinch. But yes, I do see that most companies are quite cash rich. They haven't been investing in CapEx. Perhaps they need to do that to alleviate some of their supply chain constraints, maybe to integrate a supply chain, to buy some vendors. But ultimately, we will see that that purchasing power, I think, will remain robust, particularly among the retail investor.
Ethan, equities remain an inflation hedge if they can pass that inflation on to the consumer. Are you confident that they will be able to continue to do so?
Yes, I am, to a degree, not to the kind of levels we're seeing today. 8% price rises cannot be sustained. The consumer cannot support that when they're not seeing their wages match that in terms of an increase, and they're also not seeing, for example, their residential property rise. We saw close to a 20% rise year on year. That makes the consumer feel buoyant. We're not going to see that same level of increase. So the consumer won't have the same confidence. They will be seeing the price increases at the pump and their gas. They'll be seeing it in their grocery bill. So I don't see that companies will retain that pricing power going forward, no. But yes, to a smaller degree, low single digits, yes.
I think you hit on a really crucial point here that you will see this essentially hit consumer pockets. But there is a difference between slowing down growth, demand destruction, and then an outright recession. Are the fears of an outright recession, specifically in the United States, overdone? What's your thought?
We would say, yes, they're overdone because of the tight labor market currently. We're not looking at a stagflationary environment because the demand for labor is simply so strong. So much of the workforce have fallen away, are not participating any longer. The picture might be different in Europe. And there perhaps will be a slowdown. We do see GDP growth slowing to single digits, but whether that will occur in 23, 24, 25, it's very difficult to say. And investors cannot simply go to cash now in expectation of a recession. We saw that JP Morgan was hedging its bets essentially, or preparing for the worst. And what should we do? Well, we can't go to cash because that is essentially destructive right now.
Ethan, it does sound as if there's something of an alarm going off. I may leave this interview there as a result of it. Thank you very much indeed. Ethan Deffitt, Monitor Chief Investment Officer. Thank you very much indeed. It's an interesting conversation, isn't it, Critty? This idea that you don't want to be in cash because you are obviously going to see the inflation erosion that is going to come as a result of that. But nevertheless, if asset prices are going to come down, you potentially could hit a double whammy on that. And we could potentially be heading very soon as well for positive real rates. So it's interesting how all of this is changing. But a lot of people are saying don't go into cash because of the inflation hit. I wonder if you're going to see an asset price hit on the top of that.
Yeah, and I think one of the major questions is also this narrative is changing week by week. Guy, just 2 weeks ago, we were talking about an outright recession, how the consumer in the United States might not be able to handle the things that Ethan was actually talking about. But here we are now saying perhaps they're a little bit more resilient, and perhaps that's something the market is actually taking in stride. It's
amazing how the market has re-steepened that curve. I suspect that inversion, increasingly with historical kind of hindsight, looks like maybe it could have been a positioning story rather than an inflation indicator. Plenty still to talk about. We're going to come back to talking more about JP Morgan a little bit later on in the program. This is Bloomberg.
Well, we're nearly an hour into the trading session. Here's where we stand. You do see the S&P 500 up marginally, up 0.3%. But check out the NASDAQ 100 making quite the rebound after being under quite a lot of pressure in the last couple of weeks, up a whopping 1%, in line with the dollar, which is once again up just marginally. But that's a relationship you really want to keep an eye on. Tech and the dollar, as well as tech and real yields, especially the nominal yield, actually down about 7 basis points today. So that's probably boosting tech just a little bit. Let's talk about other things in the yield space. The 2-year yield, for example, coming back down. You do actually see it as you start to price in some more volatility in the bond market, specifically pricing in what the Fed is going to do next. Are they going to hit it hard with 50 basis points? Another thing thriving is going to be those airlines. Remember, we're getting a lot of airlines out saying that the rebound is strong, especially coming off those Delta headlines today. The intraday, you see the airlines higher, but right now, on a longer basis trend, they are still in the red, Guy.
Absolutely. Ed Bastian, the Delta Air CEO, speaking on the call right now. We'll continue to update you on what we're getting from him. Also coming up, we're going to look at how the safety concerns that we've seen jumping to the top of the agenda over the last 24 hours are now affecting efforts to revive New York City's economy. Bess Friedman, Brown Harris Stevens CEO, joining us next. This is Bloomberg.
The man described as a person of interest in the New York City subway shooting is now being called a suspect. Guy, a lot of headlines have come out since this morning. Mayor Adams earlier on Bloomberg Surveillance saying that the suspect, Frank James, he's 62 years old. He was a person of interest about 24 hours ago. Now he has been upgraded to a suspect, of course, based on his connection to the crime scene. Keys left to a U-Haul rented van that led to his addresses in Philadelphia and Milwaukee. Of course, we're going to give you the latest headlines. But Guy, a developing story as we have it.
Absolutely. There was some reporting earlier on that he had been arrested. That turned out to be erroneous. He is still at large. The police and the authorities are still seeking him. We have seen, though, Mayor Adams' security being beefed up as a result of some social posts that were made by Frank James. And as a result of which, people are trying to wonder what the motivation here was, trying to figure out potentially what the motive was. A lot of rants online, Critty, but no real sort of clear line of sight as to why, if he did do this, he did do this. And I think that's what a lot of people are trying to figure out right now.
Yeah, Guy, 100%. I think there are a lot of questions about his social media presence and to your point, what the motive is. And we are, of course, still waiting on authorities for the latest. On terms of reporting, let's talk to Caleb Melby of the Bloomberg's investigations team. He joins me here on set. Caleb, thank you so much for joining us. We saw you yesterday in Brooklyn live covering the developments. Talk to us a little bit about what we know, what the motives are here that we could potentially or are potentially exploring when it comes to the police department. Just give us the lowdown on what we need to know.
Yeah, absolutely. I mean, we are all trying to figure out what the motives are here, and the YouTube posts by the suspect are, people are moving through them as we talk to try to identify motive. The suspect talked about his interactions with New York City mental health on those videos, and a whole host of other things, and generally seemed to be, somebody who was very troubled.
In terms of what happens next, Is New York getting back to normal? I'd imagine a lot of people are very cautious about getting back on the subway.
Certainly anecdotally, that seems to be the case. I got on the subway to come to work here today from the neighborhood. I was not alone. New Yorkers, of course, are incredibly resilient. And I saw a lot of folks on the NNR trains this morning.
I think the other thing we have to really talk about is the shorter term effect here. We still have a shooter on the loose. There is an ongoing manhunt. We also have to talk about how New York kind of deals with this in the interim. For example, schools really in the area close to 36th Street subway station. Those schools are in session, but I think we have about 4.5 hours till they are let out of school again. So a lot of the concerns are about security on the ground. Tell us about what you know on that front.
Yeah, absolutely. There was heightened police presence on the subway system today, both at the entrances, on the platforms, and throughout the system. It seems, of course, that that's just as much about making sure people feel comfortable riding the subway as it has to do with the specific incident yesterday.
Caleb, thank you very much indeed. We continue to monitor what is happening here, and Caleb and the rest of the team will be bringing us the latest details. Caleb Melby. Let's examine what this all means for the huge effort that was already underway post the pandemic to revive New York City's economy. We're joined now by Bess Friedman, CEO of the real estate firm Brown Harris Stevens. The firm is headquartered in New York City and is known for its brokerage division catering to wealthy buyers and sellers in the city. What impact do you think yesterday's shooting will have? A lot of people were already nervous. A lot of people already were concerned about the crime in New York. A lot of people were already concerned about the post-pandemic environment. Bess, walk us through what happens post this shooting.
I mean, good morning, first of all. It's my pleasure to be here. I think, look, crime is a #1 priority for Mayor Adams. We know that. That's why he won. And I think we have to get back to being a very safe city. I also take the subway, and I think quality of life for everyday New Yorkers is so important. And I think we need to have more police on the subways so that people feel safe. Because without safety, it's very hard for us to move forward. As Caleb said, look, New Yorkers are resilient. We are a very optimistic place. But we're tired. We're so tired of dealing with so many different things. And I think homelessness must be addressed and mental illness, because this suspect, who I hope they catch today, I think we have to address that. It's a bigger issue. And crime is not binary. It's very nuanced. And I think we need to figure out ways to deal with mental illness, people that are on the street. I see people all the time who are wandering, mumbling, sick, and need to get help and get services. Otherwise, they could pose a danger to people out in the streets. And so, look, I used to be a prosecutor in my former life. And people we have to deal with are most vulnerable. And a lot of this has to do with mental illness and drug addiction. I don't know about this suspect. I have no idea. I saw some of the rants. But our city, we want to get back to work. We want to be safe. We want our kids in school. You know, we have so many things to deal with. So it does have an impact, and people are nervous.
Bess, one of the key concerns, especially when it comes to this particular shooting, is that it's going to discourage more people from the revival of New York City that you were just discussing. I'm curious, though, about perhaps the other deterrent when it comes to the revival of New York City, and that, of course, is rising rates at a time when we've had about 2 years of a pretty decent housing boom coming on the backs of the pandemic. Talk to us a little bit about the future of housing, not just in New York City, but across the country.
Well, yeah, rates will certainly have an impact. We could see a little bit of a slowing down. We've seen that already in other regions because of a lack of supply. In places like Connecticut and in Florida, we've seen a little bit of a slowing down, and rates are ticking up, and inflation, as you were talking about in your earlier segment. And so we may see a slowing down of discretionary spending. But the housing market, in my view, continues to boom. People continue to buy and believe in the home buying process. So we'll have to see what happens, for example, with the war that Russia waged against Ukraine, how that will play out. We see gas prices going up. We have no more peace dividend, which is unfortunate. And so we're just going to have to see. I think there is nervous energy. We see the stock market doing a little bit of the cha-cha. It's a little volatile. And so we're going to have to see how everything plays out for us.
When you think about New York City, it is in competition with other cities. How is it stacking up as a competitive place to come to bring people into? People have left, maybe they're coming back, as you say. The market looks pretty solid right now. But as people think about what is happening in the city and they see the scenes that you've described as well, do you think they're looking at other options? Are other cities more competitive right now?
There is no other option, to New York City. I mean, obviously, I'm biased. I'm raising kids here. I live here. I'm a New Yorker, tried and true. But New York, look, you have Microsoft, Google, Disney opening up these huge office spaces. People are here. Try getting a reservation in restaurants. They're packed. Theaters open. I don't think, listen, there's always competition, but we are our own competition. We need to improve our city for ourselves. And we want tourism to be, revived. I mean, I think Mayor Adams has a lot on his plate and Governor Hochul. They have a lot to do. But I think if they work together and make safety a priority and get people back to work, I think our city will be in the #1 spot. That's, my biased opinion.
Bess, let's talk about the other issue plaguing markets, plaguing the economy, and that, of course, is the war in Ukraine and Eastern Europe in particular. But that's also something that a lot of people are saying perhaps the United States is a little bit more insulated from. Is there a connection between the war in Ukraine and the real estate story here in the States?
It's a great question, and I've thought about that. I mean, I think on a humanitarian level, people are upset, concerned. I mean, we raised as a firm more than $50,000 for the International Rescue Committee. I think people are upset about what they're seeing. How it will impact real estate is hard to tell. We see, except for inflation, we don't know. And I think Putin obviously miscalculated when he started this. And I think nobody realized or understood that Zelensky was going to be this icon of like liberty and courage and freedom, and that Zelensky, his courage was going to be contagious with his people. And so, I don't know. I think it seems like it's so far away from here and people don't really connect it to real estate. How it will impact us we'll have to see. I do think maybe discretionary spending, that is the one place where people may pause and wait before they do something.
Well, Bess Friedman, Brown Herron Stevens CEO, thank you so much for your time and your insight. More coming up next. This is Bloomberg.
This is Bloomberg Markets. I'm Ritika Gupta. You're looking at a live shot of the principal room. Coming up, Anastasia Amoroso, the iCapital Chief Investment Strategist, joining Bloomberg Television at 3:30 p.m. New York time. This is Bloomberg. Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. The man who police identified as a person of interest in the New York City subway shooting is now a suspect. Frank James is still at large.
Based on the briefing from my law enforcement officials and based on the evidence that we were able to accumulate, he has now been upgraded to a suspect. And we're asking all New Yorkers to assist us in his apprehension. Please do not approach him. If you see him or if you know about his whereabouts, please notify law enforcement.
The attack in Brooklyn left at least 23 people injured, 10 of them shot. The Biden administration is preparing a military aid package worth roughly $750 million for Ukraine. The president is allowed to transfer equipment from U.S. stockpiles without congressional approval in order to speed up delivery during an emergency. The U.S. has provided more than $2.4 billion in military assistance to Ukraine since President Biden took office. And in the UK, inflation jumped more than expected last month to a 30-year high. Consumer prices rose in March at an annual rate of 7%, and higher inflation is on the way. This month, there will be a 54% increase in the energy price cap. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy.
Ritika, thank you very much indeed. So JP Morgan has wrapped up its earnings call. It's the first, of course, of the big Wall Street banks to report first quarter earnings. Its results were a little marred by a $524 million loss tied to Russia's invasion of Ukraine. Here's what Jamie Dimon had to say on the earnings call.
That's another huge cloud on the horizon. And we're prepared for it. We understand it. I can't tell you the outcome of it. I hope those things all disappear and go away. We have a soft landing and the war is resolved. Okay, I just wouldn't bet on all that.
Let's talk about what we heard on that call. Bloomberg's Wall Street correspondent, Sonali Basak, of course, listening and bringing us the takeaways from what we heard from the team over at JP Morgan. Jamie Dimon, obviously, the rest of the crew. Sonali, talk to us a little bit about what we heard about volatility, because Jamie Dimon and the rest of the team went through a whole range of issues. And basically, if you pull them all together, how much visibility do they really have as to what comes next?
Yeah, that's a great question, because there's not a great sense of volatility being either good or bad for banks and the market at large. Remember, we've talked about this before, Guy. The idea of gapping volatility will keep clients on the sidelines. One positive note, and it happened very quickly in the earnings call today, is that JP Morgan did say that prime client balances are hovering near all-time highs. So after a quarter in which you saw a lot of carnage in the hedge fund sector and the buy side, you do see JP Morgan saying that there is money to be spent among clients and they are working with their clients to make markets.
Well, Sonali, when we talk about the war in Ukraine, a lot of people are saying it's really a Europe story in terms of just how much is affected in terms of going into recession. The United States, although affected by higher commodity prices, is relatively insulated. And Jamie Dimon has been very vocal about being in that camp, saying the consumer can weather all of this. Yet you have JP Morgan, coming out and creating these huge loan loss provisions in a very stark reversal. And at the same time, $30 billion in buybacks. How do you square the two?
Yeah, interesting. Remember, provisioning is just that, provisioning. But something interesting about the reserve build that they talked about here was about a third coming from single name specific Russian securities. So the rest of that also, some of that is related to not just inflation, but what might happen as a result of the Federal Reserve's actions here. QT, quantitative tightening, is something that they voiced a lot of uncertainty about, something we've never seen to this scale before. The other issue, interestingly, Kriti, that Jeremy Barnum, the CFO here, talked about a Volcker-style Fed-induced recession in response to inflationary pressures. Again, when he talked about the probability of that kind of a recession, he said it's low, but slightly less low than before, which is causing those provisions and those reserve builds.
Fascinating stuff. We will, of course, have you back for more in what I think is Sonali Basak's Super Bowl tomorrow. Thank you so much for your time, for insight, as always. Let's talk more about those bank earnings with Gerard Cassidy, RBC's Capital Markets head of U.S. Bank Equity Strategy. He has an outperform rating for JP Morgan. Gerard, thank you so much for joining us. Let me put that question to you. JP Morgan coming out with loan loss provisions, a pretty stark amount, but at the same time buying those $30 billion in buybacks, or I should say authorizing a plan to do so. How do you square the two?
Sure. Thank you for having me on the program. The provision was higher than expected, no doubt about it. And it was driven, as you guys just mentioned, partly due to what's going on over in Russia and the Ukrainian war. But they also had to just build reserves based on the new accounting methodology that all the banks have to use. And so they have to take a look at life of loan losses. And in doing so, they built up the reserves, because when you think about what the world was like when they announced their fourth quarter results in January versus what it was at the end of March, it has changed dramatically. And so it's very natural to boost up the reserves in that kind of change. And so as we go forward, they did talk about, the possibility of a recession increasing versus what it was at the end of December as well. So that was the driver on the provision. The authorization is what it is, an authorization. It doesn't mean that they're going to buy back their stock this quarter or next quarter. They just want to have it on the shelf so that there's no expiration to it. So if they want to buy back their stock a year from now, they can do it.
Gerard, the stock's down 3.2%. If today was a bad day for the U.S. banking sector, will tomorrow be worse?
Interesting question, because JP Morgan Chase, which is often used as the bellwether for the U.S. banking industry, they have a number of businesses that most regional banks, for example, do not have. Obviously, regional banks are not very large trading firms, and they don't have global businesses like JP Morgan Chase. I think the reason that JP Morgan Chase is suffering today has more to do with their capital ratios coming down due to the trading risks that were elevated, as well as counterparty losses that were trading partner losses that were elevated, And then more importantly, their bond portfolio has to be marked to market, and that reduced capital as well. So will that affect some of the some of the companies reporting tomorrow? Yes, we have some very large companies, as you know, Morgan Stanley, Goldman Sachs, Citi, Wells. But on the regional banks like a PNC or a U.S. Bancorp, who are also reporting tomorrow, they're not going to have the same issues as what you saw with J.P. Morgan's capital levels in our view, and therefore they should maybe fare a little better.
Gerard, I want to talk about that trading revenue that you just mentioned. Sonali was also walking us through the fact that those continue to rise and rise, really a function of the volatility that you're seeing in markets. One of the bull cases, though, for the stock market in particular is simply that volatility is going to decrease as you start to see some of those shipping rates, the supply chain issues, the inflation pre-war kind of eased just a little bit. Talk to us a little bit about what that means for the banking sector. If you start to see volatility come back down, does that hurt some of these banks and their trading revenue?
It's interesting because there's good volatility and bad volatility. And, the unexpected volatility we saw in the first quarter was handled very well. But if we get into a normalized market or a more stable market, and you start to see the 10-year government bond yield stabilize and maybe come down a bit, you could actually see trading increase without that volatility as more investors become comfortable in going out and buying bonds. We also, any pickup in the ECM business, which, as JP Morgan pointed out, was down dramatically year over year, which everybody expected from the numbers that we could glean from the geologic data. And so if we see a pickup in investment banking, that could lead to further trading, and that could offset any slowdown in volatility. And so the net of it is that depending on where rates go, it's not necessarily, a negative for trading as we go forward.
This is a point that Sonali was making earlier. In Q1, VAR went up and went up quite significantly. So in order to generate the trading returns, you are having to take significantly more risk. Spreads are widening. As a result, do we need to think about the way that we value trading revenues differently if the bank is taking significantly more risk?
Wouldn't say that we would have to think of it differently for the long term, because eventually the VAR will come back down as the volatility declines and we get into more normalized markets. But if these markets that we experienced in the first quarter, and again, remember what it was like on January 1st versus March 31st in terms of volatility, if that kind of rate of change in volatility continues throughout this year, then you're right. I think the valuation of those revenues would fall. But if we get back to, somewhat normal, not like what it was in the fourth quarter of last year, but if things start to get a little better, then the VAR comes back down, and therefore there won't be as much of a discount on those revenues going forward.
Gerard, always great to catch up and get your insight. Thank you very much indeed. Gerard Cassidy, RBC Capital Markets, head of US Bank Equity Strategy. Thank you, sir. Janet Yellen, the Treasury Secretary, speaking at the Atlantic Council right now. Let me just bring you some of the heads that we have from what she is saying. And she's got some history with the Fed here, so just remember that. Of course you do. The Fed's job is to bring inflation down. No comment on strategy. The labour market's measures are the tightest in my lifetime. She is a labour market economist, remember. Yellen says it is not impossible to slow inflation and maintain the labour market. The implication there would be, I would suggest, that it's quite difficult. And the worry is now that we see a recession. She's worrying more, basically, about the recession prospects growing in Europe, which makes sense given the geographic proximity that Europe has to the war in Ukraine right now. That will be the ECB's problem tomorrow, Kriti, and we'll have extensive coverage of what Christine Lagarde has to say on that front. I think the ECB's got some real challenges ahead of itself. The Fed's got some challenges. The ECB's are even greater, I would argue.
Yeah, it's really fascinating when we talk about historical precedents. Can Europe actually drag the rest of the world into a recession? I think that's really the risk here that Yellen is perhaps alluding to.
Absolutely. There will certainly be some read across. The US is a more insulated economy. Europe, certainly a more trading economy with the rest of the world. We'll come back. We will focus more on what is happening with these markets. Something of a short squeeze taking place in the Treasury market today, I would argue, ahead of the long weekend. This is Bloomberg.